Hi everyone. Today let's talk FOMC forecast once again, as well as the economic data. Then we'll get into the charts. Then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the FOMC is tomorrow, and we talked about it a little bit on Sunday, but let's see what they're saying about it now. They say there's virtually no chance of getting a raise this FOMC meeting. The Fed futures say that we're 99% likely to get a pause. And that's what they're pointing to here. Inflation did tick up, which is interesting, but unemployment and the jobs market has cooled down pretty substantially. And I think that'll be interesting going into the FOMC. They say markets are pricing in just a 1% chance of a hike. So like I said, 99% chance of a pause. That's what we're looking at. Interest rates are expected to stay in that same range. We'll get a new version of the dot plot. That'll be interesting as well to see where they see inflation going in the future, potentially looking for a cut and finding out when that's going to be next year. Supposedly there's one more hike coming this year. That's what they said earlier in the year, but we have not seen anything about that going forward. We're not expecting one now, and maybe they'll give us an indication of when that could be later in the year. So we'll be looking for tweaks to the statement specifically, and then of course we'll get the press conference at the end, which tends to give us a pretty choppy market. Moving over to the economic calendar, CPI for the Eurozone, slightly better than expectations on the headline number. Core came in right at expectations. Building permits better than expected, which actually drove the markets down a little bit, which was interesting. And then, of course, tomorrow we have FOMC at 1400. Current expectation, 5.5%. And then the press conference 30 minutes later. Moving over to Max Payne, basically no changes here. 444 put wall, 450 call wall. Max Payne hasn't changed. Definitely going to be interesting after tomorrow's session, but no changes today. Getting into the charts here on the hour and the 4 hour on the SPY. What an interesting day. So we had 3 big bars in a row on the hourly chart, big bearish movement. Took out that trend line, wicked my next level at 439.98, almost to the penny, then rallied right back to the 21 EMA. Still a downtrend, but this was a pretty interesting reversal, and you can see that doji on the day. Big wick rejection. Definitely seems to be indicating some potential support in this zone. Ended up holding the trend line on the daily chart. Momentum is still bearish on the daily, but momentum on the hourly showing more bullishness. In terms of structure, we're still in this wedge, and I don't think that's going to change until after the FOMC. But this is a clear level of support, lots of buying happening throughout this wick here. Volume stepped up from yesterday, which was also interesting. Daily chart, we're still below all of the shorter term EMAs. Longer term ones are quite a long way away. So you can make an argument for either direction in my opinion, but on the hourly chart, this is pretty convincing, and we'll see what happens based on the FOMC tomorrow. Moving over to the NASDAQ, very similar thesis. 3 hours in a row, hit my next level. Didn't tap it the same way the SPY did. Overthrew it, then rallied right back to the next one. Still below the 21 EMA, so still a technical downtrend. You also have the 55, 144, and 200 SMAs up here, so still looks bearish on the trend. Daily momentum still bearish. Volume didn't step up as much as the SPY. And again, you can see that wedge-like structure still continuing with lower highs and higher lows. Zooming in to show that wick rejection a little bit better. Wick to the low. Didn't close as bullish as the SPY, but you can see some clear buying happening with that big wick rejection at that level. So definitely interesting going into tomorrow's session. Moving over to the Russell and the Dow, not nearly as interesting on the Russell. Broke down, made new lows, continues to make new lows. Tested this wick low from Friday the 25th. We didn't close below it, but this is a new low close on the Russell. Does not look great. Structure definitely bearish. On the 4 hour chart, you can see we're below all the EMAs and SMAs. They're all in order. Looks super bearish, and that hasn't changed. Dow wicked that next level, rallied up to the next one. So we got the break, bounce, rally up. If this rejects here, that could be bearish. If we get a bounce above it and a continuation, that could be quite bullish because we did overthrow this midpoint. Find some buyers and then look for that momentum to the upside. And you can see momentum did step down here a little bit on those 2 candles. Volume, not super convincing, a little bit higher than yesterday. But again, FOMC, we'll see how that goes tomorrow. Moving over to Apple and Tesla. Apple pushed down, test the 9 EMA, rallied above the level. So that's a pretty bullish development. You need it to hold that level and then start to look for a push to the next one. Bullish momentum, bullish RSI. Apple still looking pretty good. Of course, this is still a downtrend on the longer term EMAs, so you do have to pay attention to that. But in terms of structure, looks okay. Tesla, on the other hand, does not look great. So we saw this bearish move yesterday, got below trend, wicked the 55 EMA, bounced from that level, showed a little bit of bullishness, but we couldn't get back above any of the shorter term EMAs or the trend line. You need to see that happen before we start to look for a bullish move. This kind of looks like a head and shoulders now. So we got a left shoulder head. Looks like we're developing that right shoulder. Maybe even get a retest of the 21 EMA here on the 4-hour chart up at 270.85. If it caps out at that level, then you're looking pretty bearish in my opinion. Momentum did step down a little bit, and that could be quite convincing to the upside. Again, you need to see some of those indicators at these key levels. In terms of RSI, still below the 50 line, doesn't look very bullish at all. Moving over to Amazon and NVIDIA. Wanted to highlight Amazon because this did look so strong basically throughout last week, pushing up to my 145.55 level. And since then, we've gotten 4 candles in a row of bearishness. You can see we did get a little bit of a wick rejection on today's candle, but momentum slightly bearish on the day, RSI right at the 50 line, and we got pretty close to that 55 EMA. Again, if those levels break, then we're looking at a pretty big move down to the longer term EMAs. And either way, even if they don't break, you would expect this to consolidate at least a little bit because we are so extended on this longer run here on Amazon. Definitely interesting to see it break and hold below that trend line here. Similarly on NVIDIA, yesterday we gapped down, touched that level and then rallied. Then we got an inside candle, still bearish momentum, still bearish RSI. And I would expect this to continue lower in my opinion. Moving over to staples and discretionary. Staples moved lower, rallied up, big wick rejection, momentum looking to turn a little bit more bullish. Didn't hit the trend line or my level, and you can see this is very clearly still a bearish structure, but showing a little bit of strength off of that level. Interesting. Similarly on discretionary, gapped right to my trend line, held that level and then rallied a little bit. Momentum starting to turn from there. RSI showing a little bit of bullishness as well. Still well below the 50 lines, so don't get too excited quite yet. But this could be an interesting level, and if we get a little bit of a continuation tomorrow, get above 170.68, maybe we're starting to look for that rally up to this resistance trend at 178. That would be a really strong move. Similar to what we saw here, tested the trend, rallied up to the next one. Pretty clean move in my opinion. Moving over to breadth, this is not what you would want to see on the bullish side. Continued lower after that candle yesterday. We're kind of hoping that that was going to be a rally and that wick rejection into a bull candle, get the continuation, then we'd be in a nice move. But this looks weak here. RSI broke below the SMA. Momentum, very low, still slightly bullish. Similarly here on the 200-day average, 3 candles in a row of bearishness. We didn't make a new low close, and we didn't test this trend line, but this does not look great here, and it's certainly not as convincing as the candle from yesterday. Moving over to the yields here on the 2-year and the 10-year. 2-year right at its highs, critically high going into the FOMC, makes sense. 10-year yield zooming out, we are at a new high close. We're above this wick. Going back to October of last year, that is not great. You can see we're right at that level from this previous wick on 22 August from this year, and this looks set to break out in my opinion. If we get any hawkish moves or even a surprise hike, that would be absolutely catastrophic to the markets. Momentum, bullish, RSI looks bullish, so yields look set to go higher into the FOMC statement. Moving over to the dollar on the hour and the 12-hour. You can see we fell overnight, hit the 200 and the 144 EMA, rallied up to that 55. We're still in this very slowly downtrending move here. Zooming in on the daily chart, you can see what that looked like. Right down to the 21 EMA. Held that level and then showed some bullishness on the candle for today. If that 21 continues to hold, maybe we see a nice little rally off it just like we saw last time. Tested it. If we get a continuation higher, potentially up to trend resistance around 106. That would be a really big move for the dollar. And again, that should be pretty bearish for equities. Moving over to bonds, TLT, gap down, doji. If it gaps up, could be bullish. If we get a continuation, definitely bearish. Momentum bearish, RSI looks bearish. I would expect this to continue lower at this point. TLT, we've expected this to be bearish for a while now. Trend is super bearish. The candle yesterday looked a little bit interesting, but then we gapped down and moved lower. RSI looks weak. Momentum turned bearish again, which makes sense with yields being right at their highs. Moving over to volatility, move index continues to rally a little bit. Interesting. VIX gapped up a little bit, threw a wick to the upside. showing a little bit of strength. Once again, continues to head a little bit higher into FOMC. Makes sense. I would expect that to continue until we at least get the comments. If they're particularly hawkish, maybe we see a big wick higher. If not, maybe we get the information and head back into these previous lows, around 13.20 or so. Still waiting for that ultimate move down to 11.77 in my opinion. Moving over to my accounts, these numbers are a little bit funky on the day, which is interesting. I ended up rolling out my call to 368 for a $1.66 credit, and it says I'm in $270 loss, which is definitely not true. You can see my max profit based on those calls is going to be 369.66, and we're only a couple of cents above that. So realistically, my loss would be about $40 versus $270. Now this 272 call, I might be in a little bit tougher spot there. Obviously, we're not close to 272 yet. It's another 0.5% higher, certainly within range. And I do have to be a little bit careful there, depending on what the price action does tomorrow. But overall, in my opinion, I do think we're going to be headed lower. I think that wick rejection just might be an initial test because pretty much everything else looked bearish going into tomorrow's session. Let me know down in the comment section if you think there's anything I should be talking about besides the FOMC. Pretty sure everyone's talking about it now, and it does seem like we know what's going to happen, but those comments can always come in a little bit hot. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.